Let's welcome on board Puneet Chhatwal, the MD and CEO at the Indian Hotels Company, joining in on the show right now. Puneet, hi, morning. Good to have you on the show as always. And as always, a good set, inline set of numbers once again. Uh, but you've kept your FY25 double-digit growth guidance unchanged. Tell me, what are the key factors that you saw through coming out this season? And what is it that's going to propel you to perhaps up your guidance going forward?
Well, good morning. Nice to be back on your channel. We believe that this is going to be an exceptional Q2 because of the 5-year cycle of elections. So the April, May, June was severely impacted by inbound travel of delegations, about code of conduct, with the extreme heat, which we have not experienced in the previous years. And more importantly, weddings is a very big market for India, and all the wedding dates moved into July. So I think all in all, giving a double digit guidance on top line is what we have maintained, and that's where we started the year on. And it's quite possible Q2, which is the weakest quarter, this time it's not the case that it happens to be, number three, and Q3, as we all know, is the best quarter always. So that's one factor. The second is the growth of our new businesses, new or reimagined businesses, and Ginger is experiencing a significant amount of growth, north of 40%. But if I put Ginger, Ama, Cumin all together, on a in the first quarter versus same quarter last year, it had an increase of 37%. Our guidance has been 30% for the entire year, for the next few years, for all the new and reimagined businesses. Very healthy increase in our management fee business. So all in all, that gives us a lot of confidence. And listening to the previous speaker on your channel, the infrastructure spend that is happening in the economy. And as India moves from India at 75 to India at 100, I think tourism, hospitality is very well positioned to benefit from that. And we, being the largest hospitality ecosystem of India, are even better positioned to take advantage of that.
Yes, absolutely. Hi, Mr. Chhatwal. This is Anisha also joining in the conversation. You're talking about your new and coming businesses, and one such business is the Taj branded residences, right? I think Chennai is just going to be coming up around the corner. Talk to me about what's the plan there, what's the scalability that you imagine?
Well, we have treaded this very carefully. So this is our first one, which will open in 2027. We are reviewing some other opportunities also, because this has created a lot of marketing, news in the real estate sector, and this is nothing new to this sector. Actually, if you move to the Western Hemisphere, this kind of funding of a hotel together with branded residences has been there for over a few decades now, and is a very well proven concept. But we have to just make sure that the titles are clear, the people we partner with are good, and a lot of other things. And we may even explore that on our own land banks that we have. So I think we will talk more about this in the next 6 to 9 months.
6 to 9 months, but I just want to come back to the point that you were talking about Q2. Could you talk to us about how the offtake has been since, let's say, the start of the month? And because of monsoon, do you anticipate any sort of slowdown? Because it's been very harsh. There have been a lot of travel issues as well, right? From the airport infrastructure crumbling down to a lot of delays and cancellations. All of that does have an impact in terms of planning of holidays, etc. What's your own anticipation when it comes to Q2 and this impact?
In our press release on the results, we did indicate that the first 17 days have seen almost a 20% growth versus the first 17 days of July last year. But you're so right in terms of some delays, some cancellations, whether it's because of technology that happened on Friday, or yesterday I flew from Mumbai to Colombo to attend one of our other joint ventures board meeting. And I ended up sitting in the plane for 2.5 hours because of very strong rain. And we did not get the clearance from the air traffic control. So I think these are seasonal issues. They come and go, and that does not happen every day. But the good news is it's also brought down the extreme heat, so people are also venturing out, and we are not seeing any slowdown in business. Actually, everything is just moving at the right pace in the right direction, as we have seen in the last few years.
But the other thing is, your overall portfolio. It's about what, 325 hotels, 16 signings, and 6 openings in the first quarter. Tell me what's now planned for the rest of the financial year. What are the brands that you're going to focus on? What are the major launches that we could look forward to, other than, of course, your service residences, which you just talked about?
So, Aisha, on an average, we've been signing 3 hotels a month, and this year we have guided in opening 2 properties a month, which means 24 at a minimum. But our guidance has been we'll open 25 hotels this year and almost close to 40 new homestays under the Ama brand. Our pipeline in this 325 plus is almost 100 hotels because we have 227 in operation. And we are very pleased. Maybe the first channel to hear it, like a few days ago, we opened the Taj in Patna, which is another capital city of a state that we were missing. So we are very happy to announce that. And going forward, we have a lot of exciting projects under development. Be it the development of islands in Lakshadweep, or be it business and city hotels, like the combo, a 750 room property with 400 rooms Vivanta, 350 rooms Ginger, with the Bangalore International Airport, where we already have a 400 room, approximately 400 room Taj. So I think there is a lot of that excitement, and opening our own hotels in Ekta Nagar, or also popularly known as Kevadia, a Vivanta and a Ginger next year. So a lot of development is happening. We are doing both using our own internal accruals as well as a complete focus on management fee-based business or operating leases for Ginger. So our strategy remains to have complete dominance in the Indian market and strategic presence with the Taj brand in the international markets. And in the international markets also, we should be opening close to 7 hotels over the next 24 months, which includes Dhaka, which we were missing, as one of our important neighboring countries, to all the way to Frankfurt in Germany. And all of this is not our own investments. As I said, these are management contracts, and Frankfurt is an operating lease. So we're very pleased with this healthy pipeline that we have created, which will enable us to open anything between 25 to 30 hotels per annum.
Okay, that's interesting. So that's the hotel addition plan. But if I can ask you, the average room rate seems to have dropped a bit this quarter. If you can talk to us about the potential there, and also the international subsidiaries, how's been the performance?
I don't think the rates have dropped. They've been more or less flat, but at a very high level. We should not forget last year, your channel and other channels were asking the question, what will happen when there is no G20 and when there is no World Cup? Will the rates come down? The important news here is that the rates have stabilized at that level and are slowly increasing as we get more and more into the financial year. So that part is positive, and a lot of the dilution will come, and we will start reporting the rates on new properties. So if you're opening a lot of new hotels, it takes time for the rates and the occupancies to stabilize. But if you're still reporting north of 75% occupancy and close to 10,000 as a rate, that includes all the possible, new properties also, which have not been 3 years in operation. Typically, it takes anything between 2 to 4 years, depending on a location, for a hotel rate and occupancy to stabilize. So I think that is a part which we get in terms of very strong growth. But at the same time, that is also what helps you in increasing your revenue and profitability and margins because of that not like for like growth.
Okay, and since we're talking to you at the cusp of the budget, Mr. Chhatwal, anything specifically that you're watching out for? Yes, you talked about infrastructure creation, but I think job creation, skilling has also been one of those areas that has been much talked about. What's your own expectation?
Well, I think we have laid out our expectations over several years. I think more important is to position the sector where it rightfully belongs because it is the highest multiplicator of jobs globally. And as we have a demographic dividend to the rest of the world in terms of our population, it would be good to somehow support this sector directly. Indirectly, the sector has benefited and will benefit because of the infrastructure changes that is happening in the country, because of the highways, because of the train stations, because of the doubling of the airports, etc. So I think all in all, the positioning of the sector as well as the perception of the sector. This is hospitality is not just five-star. That is only 7% of the total supply of rooms in the Indian hotel market. 93% is non-five stars, and it's a business that is done 24 hours a day, 365 days a year. It's a very tough business, and we need to work together to change the perception. If we get some benefit, some recognition, we'll be the happiest ones and we'll be applauding loudly.
Point taken. On that note, Mr. Chhatwal, we'll let you go. Thanks so much for making time and speaking with us today. So that's the latest coming in from the management. Still confident and very confident at that about a double-digit growth in the entire year, even if the first quarter was a bit subdued versus expectation. And the first 17 to 20 days of the month has been really strong. That's the word coming in, and a good pipeline in terms of the outlook forward as well. Quick look at the top.
If you like this video, then like, share and subscribe to ET Now.